Okay, so how many days in June are we going to use? 25, because we're going to take 30 days in June minus the 5th, because we signed it on June 5th. Okay, how many days do we have left? 65. How many days are we going to use in July? 31. How many days will we have left? 34. How many days are we going to use in August? 31. Good. How many days do we have left? 3. So what are we going to use in September? 3. Good. Okay, let's just go ahead and go to note number 4 and do the same thing then. Okay, so this time we have 120 days. It says that we signed the note on June 12th. So we're going to do 30 days in June again, minus 12, because we signed it on the 12th. So how many days in June are we going to use, Aaron? 18. Now we're going to take that 120 that we started with, minus the 18 days that we used. So how many days do we have left, Luke? 102. Okay, how many days of July are we going to use, Catherine? 31. How many days do we have left then, Alex? 71. How many days are we going to use in August, Ibrahim? 31. Caleb, how many days will we have left? 40. How many days are we going to use in September, George? 30. How many days do we have left, Aaron? 10. So how many days will we use in October, Luke? 10. Okay, so now we're going to figure out the interest for each of them. So we're going to fill this in. What number goes in here, Catherine? 20,000, so the principal amount. What percentage is going to go in there, Alex? 8% is our interest rate. And then what are we going to put here, Ibrahim? 90. We're going to put the days. Okay. Remember, in accounting, we're going to use 360 for the number of days in a year for easier math. So we're going to take 20,000 times 8% times that fraction of 90 over 360. Now I'm going to put that number that we just figured out here, because I don't have a spot for us under the interest to put it in. So what is our interest going to be, Caleb? 400. Okay, I'm going to go figure out the next one. Okay, what is going to be my principal amount, George? 10,000. What's my percentage, Aaron? 6%. And how long is this one, Luke? 120. Okay, so again, we're going to take those and multiply. Okay, Catherine, what is going to be then our interest for that one? Did I do my math wrong? Yeah, try it one more time. 10,000 times 6% times 120 over 360. Oh, okay. Okay, so 200. Okay, so what's going to go in here? The principal amount. So all they're just asking for is that principal amount again. So this one is 20,000 and this one was 10,000. Okay, down at the bottom then it's listing those different notes, and then we're really just filling the information that we already figured out. So what was our interest for the first one? They're talking about the dollar amount. 400. What was the interest for the second? 200. Okay, then they're asking for our maturity date. So when it's due. When is the first one due? September. They wanting us to write it out. September 3rd. The second one is due on October 10th. And then we're going to put in our maturity value. So to figure out our maturity value, we're going to add those two together. So our first one is how much? 20,400. Our second one is 10,200. Grade step 1. Next step. Okay, we have 3 transactions. It tells us that July 5th, we accepted a 90-day 8% note from Gary Kinney for an extension of time on his account, $1,800, note receivable number 5. So we need to journalize that transaction. Okay, so we're going to go into our general journal. I'm going to put in my date, July 5th. All I'm doing here is I'm going to transfer that from an account receivable to a notes receivable. So what am I going to debit, Erin? I'm going to debit notes receivable. My document number is NR5. How much am I going to debit that for, Luke? $1,800. So I'm going to debit it for the face amount, the principal amount. What am I going to credit then, Catherine? Accounts receivable. And what was it? Gary Kinney. And I'm going to credit for the same amount. Okay, on the 12th, it says that we received cash from Mary James for the maturity value of NR1, a 60-day 9% note for $500, receipt number 113. Okay, so for this one, we are receiving cash. So we're going to go to our cash receipts journal. I'm going to put in my date of July 12th. Now I'm receiving cash, so I'm going to go put in my cash debit first. So how much cash that I'm receiving, I'm going to need to, Okay, so what they're doing here is they're telling us that the note was originally $500. It's a 60-day note for 9%. So what do we need to do? We need to figure out the interest. So we're going to take $500 times the 9% of interest times 60 over 360. Okay, that interest is $7.50. We need to add that to the $500 face value. So how much cash did we receive? $507.50. Good. Okay, what are we going to credit? What's our first account that we're going to credit? George? Not accounts receivable. You're close. 428. Notes receivable. What is it? Receipt 113. Okay, and how much are we going to debit notes receivable for, Luke? 500, because that's how much the note was for. Okay, what else are we going to debit then, Catherine? Or, goodness, not debit, we're going to credit that. Good. Okay, and then $7.50 came from interest income, so we're going to credit interest income for $7.50. Okay, we have one more transaction. It says that Dennis Kraft dishonored a notes receivable number 2, a 90-day 9% note for $400. So this we're going to go into our general journal. It's the 26th. What we're doing now is kind of the opposite of this one. We're transferring it from a notes receivable into an accounts receivable. So we're going to debit accounts receivable slash Dennis Kraft. Now, what we need to do is we need to figure out how much he owes us then. Okay, so again, we need to figure out 400 times 9% times 90 over 360. Okay, that tells us that he owes us $9 of interest plus that face value of 400, so that he owes us $509. That's going to be our debit to accounts receivable. Okay. What are we going to credit then, Catherine? Notes receivable and what? Okay. So we are saying $400 of that we're taking out of that notes receivable, and then 900 of interest, or not 900, $9 of interest income. Okay, next step then is posting. So we are starting with our general. We're going to start on notes receivable. The date is the 5th. Post reference is what, Alex? G7. And we are going to debit that account for $1,800. And then we're going to find our new balance. Ibrahim, what's going to be our new balance then for notes receivable? If we have a debit and a debit, we want to add. $18,000. Account number 1170 goes back up. Okay, now we're going to post to accounts receivable. What's the date? The 5th. Post reference is G7. This time I'm going to credit for $1,800. George, what's my new balance going to be for accounts receivable? And account number 1130. We also need to post that to Gary Kinney. We're also posting that as a credit to his account. And now his balance is going to be 0. Now, here's where we read in the book, what would we write off, or what, not written off, what would we put in the item column? Accepted note. Okay. But remember, for some reason in Applia, it doesn't have you write that in there, but that would normally be written in there to show that they didn't pay us. We just accepted a note instead. Okay. Account number 120 is going to go back up. Okay, next one, July 26th, we're going to post to accounts receivable. G7, we have a debit of 409. What's our new balance then?